Welcome back to Real Estate Mindset. Today's video is going to be absolutely, I want you to say it out loud, let me hear it, bonkers. Now, the data is in and foreclosure data is still lagging behind quantitative tightening, runaway inflation, skyrocketing interest rates, and the Federal Reserve's massive national financial rug pull. So, in order to answer the question, when will a foreclosure crisis happen and how bad will it be, we first need to understand this data is lagging. We are coming out of a foreclosure ban. Loan modification does work, and we need to add logic in our review. And today we are going to break down Black Knight's September foreclosure and default report. Now, real quick, understand I'm not a financial advisor, even though my bio is as a realtor, loan officer, and instructor in real estate. I have been doing it for 2 decades. I have had a foreclosure, you guys, from my bad decisions. I did crawl my way out of a gutter. I am renting right now, but I own, just for the haters that want to attack me. So guys, do me a favor, like this video, subscribe if you haven't already, and don't leave me hanging. Shoot me a comment below. But regardless, the name of the Black Knight article that we're going to review today, as well as Fred economic charts going into savings and things like that, is titled Black Knight's First Look at September 2022 Mortgage Data. Now here's the article right here, guys, and there's really only a couple things that I really want to pinpoint here that I've highlighted, and that is the number of borrowers a single payment past due rose by 1%, while 90-day delinquencies fell 1.5% in September and are now only 24% above pre-pandemic serious delinquency rate. Now, the second bullet point, foreclosure starts fell 9% from August to 18,400. That is 53% below, below pre-pandemic levels, with starts initiated on 3% of serious delinquencies, still less than half the rate of the years leading up to the pandemic. So I really want to emphasize that this data right now is extremely conflicting, because on one hand, we're 53% under pre-pandemic levels from a foreclosure start aspect, but we're 24% over serious delinquencies when compared to pre-pandemic levels. Now, the question is why is that? Now, more than likely, loan modifications, like I said, outrageous equity surges. And the biggest thing of all, you guys, remember, foreclosure data is extremely lagging. And I'm going to pull up a chart here in a second that is going to show you guys essentially what happened back in 2008, how quickly things spiraled out of control, where we're at right now. We're going to take a look at price cuts and things of that nature. But regardless, let's get back into the chart and analyze this data from Black Knight. Now, this is a chart that I have been referencing a lot, and you guys can go to my description, hit the link, and access this data yourselves. But this starts with total delinquencies. So this is loans 30 days or more past due, but not in foreclosure yet. So that rate, you guys, is actually 2.78%, which is down month to month 0.18%. Now, overall, I want to make clear that that level of default, 2.68%, is actually extremely low, which it should be, because remember, if people are struggling and if people are falling behind, they can just sell their house. Now, second line, total U.S. foreclosure pre-inventory sell is up 0.4% month over month, year over year 35%. So essentially, total U.S. foreclosure pre-sale inventory is flat. But here's another really important data set to look at, guys, which is foreclosure starts. Foreclosure starts in September. We're at 18,400 households, which is down month over month. This is crazy. I actually thought these trends would reverse where they're going at now, but it may be because of midterm elections. I don't know. That's what I believe. But regardless, are down month over month 9.36%. However, they're up 371% year over year, which again is not really an important number to look at, because remember what happened last year, a foreclosure ban. So next is foreclosure sales is up to 0.6% overall. That's a month over month change, guys, of 11.96%. But here's some other numbers that I really want you to pay attention to right here. This is the number of properties that are 30 days or more past due, but not on foreclosure. That number right now is roughly 1.5 million. So the reality is, with that number, historically, this is the crazy part. This number is low. Okay. Next is number of properties that are 90 days or more past due, but not in foreclosure. So this represents serious delinquencies, and serious delinquencies are at 558,000 households, which exceeds 2007 levels. So we have a huge problem right now with serious delinquencies. Now, the next is number of foreclosures in pre-sale inventory, 185,000. Now, that remained zero month over month change. So that's a little suspicious to me. How could it possibly be zero? Whatever, it is what it is. But the total number of properties right now in distress is 1.67 million households right now currently behind on their mortgage, and add several other millions that are behind on their rent. So again, you guys, essentially what this data is saying, other than the serious delinquency status, we're not really in that much trouble, which is really why you have to dig into that data to get a better idea of what is happening. So I'm about to bring up a chart, but remember, the amount of people right now in serious delinquency or right before you go into a foreclosure is 558,000 households, which in my opinion is an astronomical amount of people that are currently this close to losing their house to unaffordability more than likely and foreclosure. But take a look at our next chart just so I can dig this point home. All right, guys, so stick with me here. There's really 2 points that I want to make, okay? So the first one is up here. Let's look at 2007. So this was right before, this row right here is essentially showing you the data of what state we were in right before the last financial crisis. And I just want to point out that serious delinquencies, which is right here, was less at 551,000 households in serious delinquency status. So as you guys know, we're at 558,000. So right now we have more people that are in danger of foreclosure than we did in 2007, right before the financial crisis. But I also want to point out this number, okay? This number, think about this for a second, represents 3 million households that were in serious delinquency status as of January 31st of 2010. The reason why I want you guys to see this number is this is the year in 2010 was the year of the worst foreclosure crisis that we ever had. And the reason, guys, that is so important to understand is we did not have a foreclosure crisis going into the recession. We had the start of it. We had red flags showing. But what's important to understand is it took 2 years after the recession for the foreclosure crisis to hit its peak. Again, 2 years after the recession. What people really need to understand is the housing market is not like the stock market. Things happen way slower. Okay, so put that in perspective. But now what I want to show you is just how unaffordable houses are right now. Because again, what is not showing in the foreclosure data is how much we're suffering right now because the data is so lagging. But take a look at just how unaffordable housing is right now as compared to 2008. Take a look. And again, guys, this is Black Knight's data. I suggest you go to my link that I have provided in the description and check out this report. These reports are super awesome. But this is the payment to income ratio. So this is essentially saying how much median household income goes to just paying off the mortgage, not utilities, not medical, not food, not diapers, not formula, not gas, not insurance, just your mortgage. So we have skyrocketed, you guys, skyrocketed to 36.6%, okay, which is almost kind of like DTI when qualifying for a home loan. But 36.6% payment to income ratio, that is insane. If you look right here, guys, let me scroll down a little bit. If you look right here, right before our last financial crisis, unaffordability or the payment to income ratio was at 33.8%, which means right now homes are even more affordable than they were in the last financial crisis. And they're getting more unaffordable, guys. Things are getting more difficult to purchase. So I expect it to be even higher than 36.6%. But look at this. If we go over here, it's really easy to tell that the last time houses were this unaffordable, guys, and think about this. The last time houses were this unaffordable was in the 1980s. And that's why I keep telling you guys, we really have to put a lot of logic into what's going on here, because not only is this data lagging, but it's also tainted because there was a foreclosure ban. So essentially the government reset foreclosures. So all of this data is extremely, extremely lagging, but I can assure you right now that people that are purchasing, especially over the last year, cannot afford their homes. If anything happens, if we do go into the recession, which we're already in, I won't go there, but I'm going to keep saying it. We're in a recession right now, a technical recession. We had 2 quarters of negative GDP. However, the moment that job loss starts spiraling out of control, a lot of those recent owners that can barely afford their mortgage payment are going to have no choice but to either foreclose or short sell their properties. But case in point, take a little look at this next chart right now. So this is a map essentially from Black Knight showing the drops in prices. So obviously, guys, it's no mystery anymore. We are having a price crash. Okay, it hasn't hit every metro area, but it has hit many metro areas, especially out west. If you look here, all of the base cities are, have strong declines in prices. Obviously, Texas as well. Florida's getting there a little bit on the East Coast, as you can see. Also the Southeast. You're seeing this spiral out of control across the nation. People are losing the only value that they were holding on to, which obviously, guys, was their equity. And essentially, by the prices crashing like this, what that is going to do is going to trap millions of homeowners from being able to either refinance or sell their property. And the reason that is you need to have equity in order to do both those things. But I want to drive one more point home. And the fact is, we are broke. The United States, most households right now are absolutely broke. So the fact that the payment to income ratio is so high, but yet we are broke, do y'all see what's coming? Do y'all see what's coming, you guys? Now, obviously, the federal government can pass some legislation to bail us out again, which is going to lead to extreme inflation and runaway inflation once again. But let's just talk about the data that we have right now. Take a look at the savings rates for America. All right, guys, so this is very, very interesting. And what I did here is I went back to 2007 so I can show you the state of American households right before the last recession. Now, this is Fred economic data, personal savings rate. So it's done in a percentage of income saved. And as you can see right now, we have plummeted down to 3.5% of our personal savings rate. So our personal savings rate right now, 3.5%. Pre-pandemic, it was around 8%, okay? In the upper 8%, sometimes 9%, as you can see here. But I want to go all the way back to right before we headed into the Great Recession. So as you can see here, the personal savings rates right before we went into the recession also plummeted down to the high 2s and low 3s. So we are where we were at right before the Great Recession. And here's what's especially crazy about that. We just got an overwhelming amount of money in the form of stimulus from the Federal Reserve. So how the heck, you guys, how the heck has so many people spent all of their money? Where did it go? So instead of most people saving their money like I did, I saw this coming. I'm like, the federal government is giving us money. Are you joking me? So I saved all the money, all of my stimulus money. I saved, you guys, because I've never seen anything like this. But unfortunately, it created extremely, extremely bad spending habits for so many Americans. And what that's going to lead to, guys, is additional pressures on creating a foreclosure crisis. Now, essentially, guys, in conclusion, once we start putting the pieces of the puzzle together, it becomes super evident that it is possible that we have a foreclosure crisis as big as the one during 2008 to 2011. Now, I believe as a result of the foreclosure ban, loan modification, and excessive increases of equity, we are not going to see a foreclosure crisis start until mid-2023. Now, that's just my forecast, guys, but regardless, I really hope you guys got value, insights, and perspective from today's video. And if you're out there investing in real estate, I wish you luck, and I hope you win.